Hello, welcome to another live Google Hangout on the Living Income Guaranteed. And today we are going to be continuing our series of discussions about alternatives, changes, reforms in the current system to make it more a way for ourselves, the people, to empower ourselves in all things related to money. And today we're going to be discussing about public banking. And we've entitled this Public Banking, the Power to the People, because as you and I have been aware of, private banks and Wall Street have been a great source of stress for our economy. And it is about time that we learn about how can we circumvent them, how can we make them obsolete and create a solution that is not only a way to sidetrack them, but also to empower ourselves as a community. So today we have Matt Stannard, who is a part of the board in Public Banking Institute. So Matt, thank you for being in this Hangout. Welcome.
Thank you very much for having me. It's a pleasure.
And I would like to also invite our viewers to place questions, comments throughout our live session. If you, of course, are watching through the YouTube video, you can also place comments, questions there, and we will make sure that Matt gets to them. So without further ado, let's start with our conversation. This will be an educational conversation about public banking, which is a topic that we hadn't really gotten yet here. We've talked about alternative currencies, credit unions, mutual aid ways, but now it's about going into what public banking is. So can you give us an introduction of what public banking is? What are the principles in it?
Certainly, and before I do that, I want to invite everyone to visit our website. It's publicbankinginstitute.org, publicbankinginstitute.org, and that website has tons of resources, including questions and answers, things that you can read, other sites that you can visit, because there's definitely a lot to the subject of monetary reform, and particularly these really robust measures like public banking. So a public bank is a bank that is owned by a city or a county or a state, some kind of government entity. So it's owned by the people if you're in a democratic society. And the bank capitalizes itself with public money. So it could be tax money, it could be money that's in the comprehensive annual financial reports of cities, it could be pension funds or whatever, but that money is stored in the public bank. And then the public bank can lend to public entities like other government entities. It could also lend to small businesses, it could lend to students. And the magic of a public bank is that it is able to do that at a very tiny interest, or no interest at all, if it decides in the charter and if the people running it decide that that is necessary for the public good. Right now in the United States, there is one public bank. It is the Bank of North Dakota. And as an example, last year, the Bank of North Dakota lent money to a community bank in North Dakota to finance a new school built in a small town there. And they were able to build that school at 1.5% interest, where, as anyone knows who's in municipal government, building things and borrowing money, you're typically dealing with Wall Street and you're typically dealing with 10% or more interest. And in fact, interest can double the cost of infrastructure, as California has learned with its Bay Bridge retrofit and other infrastructure things, whereas a public bank could do that at a tiny little fraction of that cost, because we're basically, as a government entity, lending money to ourselves. The bank then takes that interest, that tiny little interest, and pays it back in the form of a dividend back to the community, back to the government, which also means that places with public banks, on top of everything else, have much lower taxes, much lower tax rates than communities that don't have those banks. And so everybody kind of wins. The taxpayers win because they get their public needs paid for without having to raise taxes. And the community banks, the small banks in the community, win because they're being supported by a state-owned or city-owned bank. And basically everybody gets the benefit of that financial circulation in a very local and sustainable way.
I would like to ask you, we've many times discussed about the nature of money and how money is currently being issued by private banks out of thin air. So you're mentioning that a public bank would essentially be funded through taxing and so forth, and how through, in order to make any kind of project, there's usually loans asked by the government. So the question is, can then public banking circumvent or sort out that problem of money being created only by the private hands, or what is the solution in this regard?
Certainly. So every bank needs to capitalize itself. It needs to have money in reserve, but that money is not lent out. Banks don't lend their deposits. I think that if you were to write something, if we were to write something on our foreheads to take away from conversations like this, it would be banks don't lend their deposits. When a bank makes a loan, they basically fiat that money into existence by creating the credit. And then they get paid back in real money along with the interest. And that's how banks make money. And so the question, the underlying philosophical question is, who should have the power to create that money, to create that value? Those of us in the public banking movement, along with people in the economic justice movement in general, I think, believe that communities should have the power to create that value, that it shouldn't be in a few private hands in Wall Street. The cost of letting Wall Street control money creation now is that hundreds of billions of dollars are sucked away from public funds every year in the form of interest payments, in the form of bad debt, in the form of derivatives and interest rate swaps, and gambling, basically, that Wall Street does with public money. You put that money into a public bank, you're not going to need to do that, because you're going to be able to build a new school at very tiny interest rates, or you're going to be able to even do quantitative easing for the people and, you know, give people money directly. So the underlying thesis is that the creation of money is something that anyone, any entity could do, and we say, let's have the public create the money instead of private interests creating the money. And that's something that historically, you know, there's been a big struggle between those private interests who want to create the money and people who want to kind of take it back to the public. And in the United States, you have the populist movement of various socialist movements through the ages. That's how the Bank of North Dakota came into existence. Was populist and socialist farmers and workers got together and said, look, we shouldn't have to borrow money from Wall Street or even from the Twin Cities to fund these things, you know, to fund our farms, to fund our roads. We should be able to lend that money to ourselves. And once you understand that the communities can actually do that, then it becomes really easy to conceive of how you would create a bank to do that.
So what is required then, and why aren't there more public banks? If, you know, it sounds like it works as money and as banking should have always worked. What do you see are the obstacles?
Well, that's a very good question. And unfortunately, the answer is pretty simple. I've been in the movement now for several years. What will happen is that communities will decide this is a good idea. They will commission a feasibility study and a legal study. They'll do it. The people will be in favor of it. City councils or state governments will be in favor of it. And then the Wall Street hucksters, you know, basically helicopter in their suits, and they say, this is terrible because this is the government running the economy. We can't have that. And they basically, they tell a lot of, you know, exaggerated stories about how the government is bad. They ignore the fact that it's really Wall Street and it's really the big financiers who have been responsible for the malfeasance and economic crises that we have faced time and again, most recently the one starting in 2008. And so it's really lobbying and propaganda that stops that process. Most people who, I mean, North Dakota is one of the most conservative states in the United States. And those Republicans in North Dakota love their public bank. They love their state-owned bank. They love their socialist bank. They would not get rid of it even if they could, because they see that it is fiscally conservative for a state to finance its own projects. And so we think that the biggest obstacle is a lot of propaganda and a lot of lies on the part of Wall Street.
So in terms of North Dakota, that bank, how does it practically operate? Because, you know, regular people say, well, I want a bank that I can go to its various branches and have like this connectivity everywhere else. So what is the practicality in that sense of belonging to a public bank?
Mm-hmm. That's a great question too, because the one thing that the Bank of North Dakota does is partner with small community banks and credit unions in the state. Now, people who study banking know that community banks are vanishing. They're an endangered species. They are going under all over the place. There's one state, however, where they're not vanishing, and that state is North Dakota. North Dakota has more community banks per capita than anywhere else in the country. They're very strong. And so here's how it works. You or I would not necessarily become a member of the state bank. We might belong to local banks or credit unions. But somebody wants to start a small business in North Dakota. They go to their community bank. The community bank says, we would like to capitalize this, but we're going to work with the Bank of North Dakota to make sure that your interest rates are very low, and that if you qualify using the kind of criteria that we use in this community, then we will work with the Bank of North Dakota. They will help us to underwrite your loan, your small business loan, and you'll end up paying very little in interest to do that. Same thing with, when you have the floods, very serious floods a few years ago in North Dakota. The Bank of North Dakota either worked with community banks or did direct lending to various government entities and private entities to make sure that that the flooding was taken care of. If there's road repair, same thing. And so in North Dakota, the small, tiny community banks work in partnership with that public state bank.
So in the sense of also us in these Hangouts having discussed other options like credit unions, as we were saying before the Hangout started, they are not mutually exclusive type of solutions, but it's actually something that would be in support of them as well, right?
Yes, absolutely, absolutely. Public banks help small banks. Public banks don't necessarily help big banks, but we don't think, at Public Banking Institute, we don't think that big banks necessarily bring anything to the table in terms of having a sustainable economy.
What about the term nationalizing banks? Is the creation of public banking the same? Or how does it differ? Or are they completely different things?
You could have a public bank at the national level. You could nationalize the Federal Reserve, which many people have suggested doing, and that would then allow the Federal Reserve to function as a public bank in much the same way that the Bank of North Dakota functions as a public bank for that state. You could certainly do that, and many people do that. Now, at PBI, we concentrate on helping states and local governments start public banks. We definitely feel like a nationalized Federal Reserve would probably be a good thing, but our project is more localized, simply because we feel that that's where the political energy is right now. There's not as big of a movement to nationalize the Federal Reserve, but you could certainly do that. And the idea in all of these instances is that what you have, whether it's a public bank at the national level, state level, or the city level, is you have transparent, democratized finance. Right now, the banks, the private banks, are just oceans of opacity. They're very opaque, they're very secretive. Whereas if you've ever worked for the government, you know that you can't hide things. You can't hide your emails, you can't hide your correspondence, you can't hide even the tiniest little decisions that you make. And so A bank that is operated by the government is going to be one that is much more transparent and one that is subject to legislative review, even judicial review if necessary. And so there's that constant stream of accountability that is not necessarily there with Wall Street banks.
That's precisely one of the questions that we as the public could have, because we know that governments are in cahoot with private banks, corporations, to allow that infiltration, that allow all the corruption, the rigged system that it is. So how can this transparency be assured, guaranteed in a public bank?
Well, there's a couple of answers to that. The first is absolutely we would have to be as diligent with public banks as we are with every other government entity. And we've seen now with the crisis in Flint, Michigan, that the government is not necessarily better or worse than the private sector. The converse is also true. The private sector is not necessarily better or worse than the government. The question is democracy. The answer to problems with the government is more democracy and not less. The reason that the Bank of North Dakota has done so well and has had so little problems with any kind of scandal or corruption is that they have a very diligent legislative oversight, so that everything they do is basically under a microscope. And that's what you would have to do. But you can't do that with private entities right now. And so, because they get to hide behind certain corporate veils and certain veils of secrecy, whereas an accountable government entity would not have to do that. That's also a reason for keeping it local, because the more local it is, the more accountable it is to the people in that community. And so there are lots of things. The other, and I apologize, the other answer to that question is that the law of a bank is in its charter. When you charter a bank, you can say, these are the things that this bank has to do. This is the social mission of the bank. This is the policy mission of the bank. This is how the bank is going to do its finances, and this is how the bank is going to be subject to public oversight. You put all that in the charter, it's basically the constitution that governs that individual bank.
Which is how things should have always worked, in essence. We can only ask ourselves, why haven't we done this before? Why have we allowed private banks to get to be these too big to fail entities that are bailed out before the people, right? So
sure. So I want to say there are other countries have public banks and do quite well with them. Germany has one of the most robust public banking sectors in the world. They actually have large banks called Landsbankens that do industrial lending, infrastructure lending, the big kind of projects. They also have what's called Sparkassens, which are small banks, small public banks that do local lending. Another thing that people all around the world do that we don't do here anymore in America is bank at our post office. Until 1968, the United States Post Office had a very successful banking system. I think at one point about 12% of Americans banked at the post office. It was so big. And it was kind of known as the working people's bank. If you talk to a lot of older Americans now, they'll tell you they remember when they were kids and their dad or mom took them to the postal bank and they made their first deposit there. And it was sort of a community bank that was also a government entity. And these banks around the world, these public banks around the world, have done very good. Germany has basically financed its transition into a post-carbon economy and renewable energy largely through the use of these public banks that can lend for the public good without necessarily being worried about whether or not it's going to be instantly profitable. Because public banks don't have shareholders, their stakeholders are the public. And so all of that money goes back into the public.
Does it go back to the public treasury, or where does it exactly is deposited back to?
Yeah, the North Dakota model is that it goes back into the treasury. And then that is used to do a bunch of things. It's used to keep people's taxes low. It's used to finance things like parks and fire and police and public hospitals and various public entities, because it's basically the bank at the end of the year just pays a big fat dividend back into the state, and then the state has a budget. And North Dakota's in some trouble now because of low oil prices, but they're going to weather this better. They're going to weather this crisis better than any state that doesn't have a public bank right now. I live in Wyoming, which also is heavily dependent on fossil fuels, and we're in big trouble right now. North Dakota's going to go through this crisis much better than we are, because they have a state-owned bank.
In relation to crisis as well, I mean, many people talk about a looming crisis in this 2016, but we've also witnessed other countries that have already given some steps toward more radical moves, like it happened in Iceland as well in previous years. So can you share with us a little bit about that, and if that was related to creating a form of public banking? Was it nationalizing the banks? How do they manage to get the banksters, as they're called, out of the country?
There's so much to say about that right now. The last thing I would want to say about public banks in relation to crises is this word called counter-cyclical. And we don't have time to get into real deep economic theory here, but basically public banking is counter-cyclical lending, which means that public banks tend to do better and to lend more in times of economic crisis. And so therefore are a counter effect on the fact that private banks, when there's economic crises, stop lending money. But public banks, when there's economic crises, can continue to lend money. That makes them counter-cyclical, and that makes them ports in the storm when things are going on economically, that are bad, like I think that things are about to get right now, especially in states in America that have depended on so much on fossil fuels. As far as Iceland, we at the Public Banking Institute held a wonderful conference back in 2013, and one of our guest speakers was Birgitta Jónsdóttir, who is of course a member of Parliament and is a member of the Pirate Party there. And there was this instant spiritual kinship between the Icelandic parliamentarians and the public banking movement in the United States, because of this notion of this rejection of the idea that private bankers should determine the value of our monetary policy. And so we were not surprised at all when Iceland not only prosecuted the bankers, but also Iceland is considering putting currency valuation and interest rates into the hands of a public central entity there, a government entity there. Switzerland is considering doing the same thing. And the idea again is, who should, we know how money is created. We know how money is deemed valuable. The question is, who should have the power to do that? Should that power be in the hands of the people, or should it be in the hands of a few elites who are not accountable? And we've seen time and again, just as Iceland did, and just as the rest of the world has seen time and again, that putting it in the hands of these private elites is not. It's really in nobody's interest but them. And so we think that Iceland is leading the way in a lot of ways in just sort of putting forward this idea that money belongs to the people and that we should democratize money, we should democratize the economy.
Absolutely. And in relation to making these kind of things possible, I mean, Iceland is a relatively small country, has over 300,000 people. Some people might argue, well, for any alternative banking system or changes in the banking system, this cannot emerge without first focusing on changing the political system. So what's your perspective on this?
Well, we certainly think that we would love to see the people elect leaders who are more cognizant of economic justice and more cognizant of how money and finance actually works. So we think that that's a good thing if that's happening. It's interesting to me. Obviously, we don't endorse political candidates because we're a nonprofit organization, but it's interesting to me that Bernie Sanders, while he was a senator, and of course he's still a senator, one of the policies he put forward was a policy to fund the creation of worker-owned cooperatives using what basically amounted to a public infrastructure bank or a public lending bank. He's gone on record in interviews as saying that he's an admirer of the Bank of North Dakota. And the one thing he has put forward as a presidential candidate is postal banking, which is basically small-scale public banking for the people. And so we certainly think that it's a great idea. There's another candidate coming out of Florida, a primary candidate who's challenging Debbie Wasserman Schultz. His name is Tim Canova. Tim has spoken at public banking conferences as well. He's been an ally to the public banking movement as well. So we certainly think there are some political leaders and candidates out there who have an idea that we can do this, because this goes beyond just redistributing wealth. This goes beyond just calling for higher taxes on the wealthy. I'm not necessarily opposed to those things, but that's redistributive. For me, the interesting thing about the new economy is restructuring the economy, not just redistributing the economy, but actually building new institutions. To me, that includes small-scale things like public banking, worker-owned cooperatives. It means implementing basic income, because we can no longer create jobs in the conventional and traditional way. So all of those things, and to me, all of those things are bound together by a common thread that says the creation and distribution of wealth is something that communities should do rather than huge private entities.
Absolutely, and this is then the real power to the people. However, in terms of making these kind of institutions work, from what I've understood, it's of course like the perfect cycle. The money stays at a local level. It obviously enables the economy to thrive at a local level, but there's also the benefit that there is a low interest to all of this. So how do these entities maintain that functionality with these low profits? Because we know that big banks, too big to fail banks, they make their fortune out of essentially interest. So how does this operate at the central banking level, public banking level?
Sure. The main answer to that question is, once you eliminate shareholder value and the need to pay your shareholders, then you suddenly find yourself awash in money, even at tiny interest rates. So let's say that a city decides to open up a public bank. They obviously are going to have to hire administrators, bankers, to administer that bank. They're obviously going to have to pay them reasonable competitive salaries in order to get qualified people who know how to run a bank. But what they're not going to have to do is pay shareholders. They're not going to have to pay investors. And so they can afford to pay their small staff, but they can also afford, again, to pay that dividend back into the state, because you've eliminated shareholders and you've eliminated the need for investors to capitalize things, because the bank can itself capitalize those projects. And at that point, once you eliminate the need for that high interest, a lot of other things happen too. You know, one of the reasons we have such an extractive and exploitative economy, this growth imperative, this notion that we need to continue to plunder the earth over and over and over again, and continue to plunder workers and extract more and more labor from workers, is high interest rates. Interest figures into so many of our economic interactions. Once we've eliminated the bulk of that interest, then we suddenly have the conduit to a sustainable economy, to slow growth, and to cooperative economic schemes where you're not going to have shareholders out there who are making a ton of money. You're going to have people actually investing themselves and getting dividends back themselves.
In this sense, we know also through the information in the Public Banking Institute website, the story about Islamic banking and the role of no interest there. Can you share with us about that to enlighten ourselves in relation to also why there's this calling everything Islam evil as part of this misinformation propaganda? So how does that work in Islamic banking?
Well, it's funny because when you think about, and I'm not a historian of religion or anything, but when you think about, this is really something that all of the Abrahamic religions have in common, even though we have come to associate some religiosity with charging interest and others without it. If you look back, you see in most world scriptures a kind of guideline that says we should not exploit people and we should not charge huge amounts of interest. And so there were Christian public banks or banks owned by the Christian church in medieval times, and they would lend to people, again, at very extremely low rates or even no rates. And of course, Islam has a very strong anti-interest, anti-financial interest value. And so Islamic banks are able to have investors partner with recipients of those loans. And so the lenders do get something back, but what they get back is not interest. They sometimes get back shares in the actual endeavors. And so that's a way to do it. There are a number of other ways that have been done from ancient to medieval to contemporary times. And many of them have been tied up with various Christian or Islamic religious practices. And again, the idea is the reason that you have high interest is that you have a profit motive that is designed to pay a bunch of aloof shareholders. Once you eliminate that, then the community becomes stakeholders. And so another metaphor that I like to use is that we want to replace the shareholding model of the economy with a stakeholder model of the economy.
Absolutely, because these absentee shareholders, they're people that are not in the community. They're just getting these huge profits in their accounts and just building their wealth while impoverishing the local economies that they have no idea of. So it is really about democratizing money through these public banks. Also in relation,
and that's especially true of Wall Street right now. And if you, there's a great report that people can find online by the Roosevelt Institute. It's called Dirty Deals by our friend Saqib Bhatti. Again, it's called Dirty Deals, and it's by the Roosevelt Institute. And it chronicles the way that Wall Street banks and financial firms have extracted huge fees, huge interest rates, and have really gambled away cities' money. And there's a direct causal line between what Wall Street is doing and what is happening in cities like Detroit and Ferguson, Missouri, and other places. Those cities end up doing a lot of those repressive practices that they do because they find themselves in debt, heavy debt to Wall Street. And so they have to then institute these horrible regressive, either sales taxes, which are regressive, or fines, municipal fines, other things which are again regressive. All of these things hurt the poor. That's why you have bad community relations. And so, there's a line, a trajectory that runs on the one hand from Wall Street and on the other hand to broken cities and broken bodies in many of our nation's greatest small and large cities.
A question that also comes up is if this movement of public banking can be related also to monetary reform in itself, or alternative currencies, which is also another movement. How do these movements relate? Can they join in a way? Do they support each other or not, etc.?
Well, I think with alternative currencies, certainly I think that they are joined in spirit. The notion of an alternative currency is that especially the way that it operates in cities and villages with alternative currencies in the United States now, is that money is meant to be spent locally. And so by designating it as a local currency, then we know that it's going to circulate through the local economy. Obviously, what a public bank can do is, again, support, underwrite, fund those local endeavors as well. It can fund the local banks, it can fund the local businesses, and it can do so in a way that's absolutely compatible with the alternative currency. And a public bank could be the money changer, if you will, between the local currency and the national currency. And if that's, especially if you create a local bank, a local public bank, and make that part of the charter and say part of our mission as a public bank in this community is to be able to, make sure that the value of the local currency is equivalent to and compatible with the value of the national currency. So I think it would be very compatible. And many proponents of public banking are also proponents of alternative currency.
Great. So all roads are leading to the same outcomes, which is in essence, once again, power to the people. So what can us as people do in order to support these kind of movements? What are the ongoing campaigns that you guys may have? Can you share about that?
Yeah, absolutely. I'm very excited about our new campaign at the Public Banking Institute called What Wall Street Costs America. And that is a campaign where we are doing our own research as well as relying on the research of other organizations and groups to build a comprehensive mosaic picture of what Wall Street has done to our nation's cities and states and small communities. And it's really devastating. What they have done is very devastating. And, kind of the sad thing is, we look at Detroit and sort of the conservative reaction in Detroit is, well, this is the fault of the people in Detroit. This is the fault of the workers. This is the fault of the people who live there. And in fact, it's not. If you look at what happened, it was that Detroit officials were fed a line of BS from Wall Street saying that they would do well from these deals. Same thing happened in Chicago. And what happened was all of the Chicago public school money got gambled away in interest rate swaps, and now they're closing schools in Chicago. Well, that's not the teacher's fault. That's not the student's fault or the parent's fault. It's the fault of the people who fell victim to these Wall Street schemes. And so the project at PBI, What Wall Street Costs America, is a national campaign of information in which we will be creating stories, narratives, interactive maps, videos, etc., that will let everybody know that this is what's happening, that there is that direct line that I talked about before that starts on the one hand on Wall Street and then ends with tragedy in our nation's cities. And so What Wall Street Costs America is our new PBI campaign. You can also just go to the site, become a member of PBI. It's very critical that our membership keep growing. And once you become a member, then you can also get onto, we have monthly calls. We have all sorts of events going on. We have news that's constantly circulating out. We give interviews like I'm giving now. And there are campaigns right now in Philadelphia, in Santa Fe, New Mexico. There's public banking legislation in Illinois, Maine, Hawaii. There's movements in Oregon, Washington. Almost 30 states right now have public banking movements. If you join PBI, you can find out about movements that are going on in your own state, or you can begin those movements and we'll help you. We'll give you the resources to do that. So I would say go to publicbankinginstitute.org, become a member, and start helping us shape the course of what I think is a very historic movement to democratize our economy.
And a very necessary one as well, because this is giving back to ourselves that power to decide how to use money, how to make money available to people, and how to, for the first time, get back to that responsibility that it entails to be managing these funds that shouldn't escape the locality, shouldn't escape to the hands of a few. And so it is a way to make Wall Street obsolete in a way without having to fight them, right?
Let's bypass Wall Street. We don't need their dirty money. We can generate our own income. We can build local financial institutions that can lend. We don't need Big Brother to do that for us. Local communities can do that. And that's something that small banks already know, especially the ones in North Dakota. But we definitely need to spread that consciousness. We don't need Wall Street. I think that would be a great takeaway from this conversation.
Absolutely. And thank you very much for sharing about this information that clarifies as well to us many of the misinformation that is spread out in relation to banking, seeing like a no way out of it, of the current state of the system. But there are options. It's all about us informing ourselves, educating about the solutions, seeing how they are already working, like the North Dakota bank, and at the same time to ensure that we keep looking at where's our responsibility to it. How can we support these kind of movements? So thank you a lot, Matt, for this discussion, and I would certainly like you to come back again to discuss commonomics, the commons, in another hangout.
Yes, I would be happy to. This has been great. And thanks to you and to all of your viewers. And again, please check us out at publicbankinginstitute.org.
Okay, thank you very much for your time as well. And thanks to you, the viewer. I would like to remind you that we will meet you next week at the same time in this live hangout. Until next time, bye, Matt.
Bye. Thank you very much.